Good evening. Ira Epstein with your SPDR ETF stock market wrap-up. And this wrap-up is for Thursday, and we're at the 9th of June, 2022. And right now, as I'm recording, the House hearings are taking place on the January 6th event in Congress. And we will see what they come up with. Does it shake anything? This has been going on for a long time. I'm wondering what the end game is. That's all I'm asking. What is the end game? Do you think you're going to put President Trump in prison over this? Maybe that's what this will all point to. I, like everybody else, am wondering, is there something there? It sort of reminds me of Geraldo Rivera. Remember when he did Al Capone's safe and we were all waiting and couldn't wait to get the thing open, and what happened? It was the biggest letdown there ever was. I'm wondering if this is the case, or we open it up that safe and there is something really big here and we wake up in the morning to a whole new world. I don't know. You saw the big break today in the stock market and the number of stocks. Just look behind me. It is a sea of red. One market on my board, TLT, Treasury instrument, is to the upside as people bought it, scared, safe haven. The dollar is the other thing. I don't have UUP here. That was the other big bid. That doesn't mean there weren't markets that went up, but the vast majority of things were down. In my morning spider, my recordings, part of that is I give you window envelopes, and when I do that, I plot key moving averages that one of them changes. You're either plotting a high or a low of it. And to make a long story short, I've never seen so many where I'm plotting the high and the market's underneath the 18-day average of closes, quite a few of it. It's bear. That's what it is. Look at Apple. It's nice that it had this consolidation, but it's an attempt at a breakout now to the downside. You have a higher high, lower low. I don't know that it has any downside to it at all, because that's not a trend. The market had a correction, and that's all that I could say about it. It's fighting a battle right where it should, the 18-day average of closes, which I define as the line in the sand. If you've taken my charting course, I teach the basics of the swing line in relation to moving averages in relation to window envelopes to Bollinger Bands to slow stochastics. 5 steps. This is all very important. Often, one of the things you'll hear me say in my course is markets like to go back to the 18-day average. It's the safe haven number. It's the line in the sand. What am I going to do from there? Just think of it that way. Here, I got the beard. What am I going to do from there? That's what this market is doing. It's trying to figure that out right now. If it breaks down, possibly 136.51. Whoa, that'll take you back to these old lows or thereabouts. If you cross yesterday's high, Wednesday's high, why not open the door up for the upper Bollinger Band at 153.21. It can go either way. It's not trending. And in momentum is just rolling to the downside. It had come up, the market stalled out, now it's trying to roll to the downside. You do realize tomorrow when we get the CPI number at 7:30, it can change everything and get everything more bearish and get everything more bullish. I don't know which way that son of a gun's going to go. They're looking for an 8.2% CPI number. That's the headline that I think you have to look at. Then they'll give you the monthlies and where they're at on that. I get it. But 8.3 was the prior report. They think it's going to come in a tad lower. What if it's 8.6, 8.7? How does the market respond? What if it's 7.5? I don't know, okay? I want sidelines. It's that simple. This is a big report. This is the equivalent tomorrow of a major Fed report. Treat it as such. Don't be a wise guy here. You're fighting at AMC in an uptrend against the 18-day average. If you take out 1177, hitting 1176, you negate the uptrend, and you're back in a downtrend, potentially going to 1071. I didn't like that I read the first review in the Chicago Trib of Jurassic Park, and they gave it a 2 out of a 4. They did not like the movie. So if that's how it is nationwide, and if that's what word of mouth becomes, that's a negative for this. They need hits. That's what you got to have, because that stock's not looking good. AMD right back to the line in the sand. So we fell back to the 18-day average, not trending, got up to key resistance, and we talked about it as it was occurring. Overbought, never embedded, into the 100-day upper Bollinger Band. And when you look back at it, you go, oh boy, why did the market break? Because you were at resistance points on the chart, that's why. Disney's still acting terrible. Today it's a breakout to the down. The target is 100.73, the lower Bollinger Band. To negate it, you got to get back over yesterday's high of 109.36, and I think the bears are going to be aggressive with it right now. In XLF, you peaked out up here. We've talked about that. I keep pointing that out in my morning subscriber video. I don't know where you're going to drift here. You're not in a trend. You're just sort of drifting around right now. I keep hearing that the financial services, the banks should do much better than they have. You would think that that's showing up. It's not yet doing it. And I would think that too. In XLI, the industrial sector, this is something of a failure. You lost your embedded reading. Where do you go when you lose the embedded reading? Right back to the 18-day average. Today's low, 93.60. 18-day average, 93.65. You're neutral going home. No way to know what it wants to do. The semiconductor stocks peaked out starting right here, and we talked about that day after day after day in these videos. You had a market that was overbought, and now it's pulled back here. Now, it's bearish going home. You'd have to get back up over these highs of 186.23 in order to negate that. So I think you're going to see selling in it, looking for 164.46. Here's what I'm fearful of. On the surface going home tonight, and I'm not saying that tomorrow you get CPI number can't change things. And I have told my clients, don't put on new trades until we're through that CPI number. I'll share that with you as clear as can be. Be careful. This is not the place in those. I like the energy part. I don't think it has anything to do with the CPI. But away from the energies, I'm very fearful right here. All right? I'd be very careful. I'm just not that comfortable. In XHB, are you going to lose the embedded reading? On the open tomorrow, you're going to lose it. So you're going to say he knows magic. How's that? No, how does he know that? Because you'd have to gap sharply higher not to. The way the math works to set up the slow stochastic, it's going to drop right on the opening. Doesn't mean it'll stay lost. Supports 61.19. Is the trend up? It is not. You're in a downtrend, but the bias is up. You've had an embedded reading, and it looks to me like it's going to lose that reading on the opening. The key isn't the open. The key isn't midday. How does it finish at the end of the day is going to be the key in it. Any reading under 79, you're out of that momentum uptrend. I think you peaked yesterday for a short term up here in XLE, and I was telling people, I don't mind telling you, on this pullback, I think you got to be a nibbler. You still have the embedded reading. You're at 84.93. It's not the same as 80.4. We'll see what happens. GLD. Is it going to hold or not? This is a big, important area. Gold's got to prove itself right here. It has disappointed over and over. I'm tired. And see how my eyes, if I could roll them, I would roll them. Over and over. The risk on the trade isn't big. It's like 30 cents. Don't get me wrong. But I'm so tired of it not being able to perform. That's all that I'm saying. I'm tired of covering it in a non-performing market. Where the better signals are the miners, and they're bearish. They're out and out bearish. Lower highs, lower lows, looking for the lower Bollinger Band. Copper finally pulled back from this rally into the 100-day average. Remember I told you it's acting a better resistance than the Bollinger Band, and now you've lost the embedded reading. Time to be sidelined. I'm the happiest guy because I'm the biggest bull on this, and I don't have my clientele in the market. I told them to be out of it a long time ago. Now I wait for the new trades. AGG. Well, how could you be anything but bearish going into tomorrow's CPI and next week's Fed report, but you're oversold? So I'm bearish, oversold, adios. I don't want my clients doing anything. And the dollar stepped on everything today. I mean everything. The dollar just went bananas to the upside. It could be targeting 27.80. It's got momentum to the upside. It's overbought. It is not a buy here. It is overbought. It could get the shorts, nail them, try to get up there. If you take out 27.33, this heyday rally has run its course then. Now we have to see, can it go anywhere? And FXE, I was so happy. It lost its embedded reading. The futures had done this a week before you did it here. And now this is now back in line with the futures, both in bear trends. Yeah, the dollar's still reigning supreme. This is going to have to rebuild to get bullish. It's bearish at this point in time. So, I look at those things and I try to figure out, hey, where does this all come from? I don't know if we have another chart tonight or not. No, that's it. That's what I was putting together for you. But I do want to remind you that, in the morning, like tomorrow morning is going to be just so important as I work with you and we start talking about what do we do with the CPI number. First, what is it? The good news is I don't record my morning SPDR ETF until 9. That means I'll have a chance, an hour and a half where I've reviewed everything. I'll be covering all these markets in there. Then I'll be telling my clients who are now pretty much in a cash position, do this, do that. The only area that I'm telling my clients that I still like so far, going home, have been the energies. If they fall, they fall. But that is the place that has held up, and it has held up just beautifully, and that's what I'm looking at. I give you trade ideas. I say, buy here, sell there, do this. Here's your objective. I'll give you the fundamentals, the chart picture. I'll lay the chart picture right out in front of you. Nobody else I know is doing that. Your broker calls you on the phone. Hey, John, here's what we should be doing. I want to show it to you with the picture, and then you decide. You don't have to trade through me. You decide, okay? What are you doing with it? Does that make sense? On the other hand, you might have a big question, and as a paid subscriber of mine, you write me about it. I create a short video for you on that answer as best as I can, get it right out to you. You got the whole picture. I know my subscribers love that. Give yourself a try. Go to our website, under the word research, take a look at what we offer. If not, just take your cursor, move it to the top up here. There'll be an icon. Give that a click. It'll take you right to that section and read what I offer. I'm Ira Epstein. You have a great day. Good luck and good trading in the morning. You're going to need it. I'll see you then.